Hey guys, this is Carl Everest from Trading Crypto Course. Today we're going to talk about the RSI indicator. Here you see a Bitcoin chart, and below that I have installed the RSI indicator. It's actually an oscillator. It is contained between 0 and 100. The RSI indicator is a momentum indicator. It measures the strength of the market. RSI stands for Relative Strength Index. Many traders, myself included, call the RSI a leading indicator. Might sound a bit confusing, as the RSI is also based on past prices, and the RSI is no holy grail. It's only measuring the speed and the strength of the market. Many times the market is already losing steam before the end of the trend is actually visible in the price. And RSI measures this. It measures the rate of change. When price gets exhausted, it's often already visible on the RSI. The RSI measures this rate of change, and people trade according to this, and so it also has a self-fulfilling nature, like many tools. So let's take a look at the RSI indicator on our chart. As you see, I have installed 1, 2, 3, 4, 5 horizontal lines on the RSI indicator. Most used lines are the outer ones, 30 and 70, and the middle one, 50. Many times new traders think that when price gets above 70, that price is overbought, and when price is below 30, the price is oversold. But these are actually quite dangerous things to say, because as you see over here, the RSI drops below 30, price drops, but it continues to drop all the way over here, before price returns above 30. So that's very dangerous, because when you think it's oversold and think this is a buy signal, it can't be sold no more, then you are buying right here, and that's a very, very bad place to buy. Or for example, over here, price gets above 70, it's overbought, but all this time it is above 70, price gets all the way over here, makes another run up. So it's actually, as you see, it's not overbought, but it's very bullish, you see. And this pattern repeats, because here RSI is again above 70 and makes this whole leg up, all the way up here, before it returns below. And again above 70 and another leg upwards. So as you see, when you look at RSI levels like this, saying above 70 being overbought and below 30 being oversold, it's very dangerous. It's not really true actually. As I have shown you, I put some lines on the RSI indicator, but you see some extra lines over here, the 40 line and the 60 lines. These lines are very important for me. When price hovers between 40 and 60, I regard it as a consolidating and indecisive market, and I don't trade that. I wait for the market to choose direction. It's nice to see that the consolidation you see on the momentum is confirmed by the chart structures on the chart. It's confirmed by the price action, because after this downtrend, consisting of lower highs and lower lows, price makes a first attempt to reverse by making a higher high and makes a higher low subsequently, but next it fails to break above the high. So it fails to make an uptrend, and you see that next price stays within the range of the higher high and the lowest low. So price confirms that the market is in consolidation and indecisive. what we now need is price to break above this level. And you see when that happened, we got an uptrend, a strong uptrend. And in an uptrend, I regard the 40 line, RSI 40, as the support level. So when it breaks below it and stays below it, below 40, it actually broke below a support line, a momentum support line. 40 for me in an uptrend, 40 is the momentum support line, and in a downtrend, subsequently, the RSI 60 line is the resistance line. So when it stays below the RSI 60, we are still in a downtrend, and when it stays above RSI 40, we are still in an uptrend. So I wait for price to choose direction after a consolidating indecisive moment. So we came out of this downtrend, then price consolidated, tried to break above 50, and you have to remember that everything above 50 is bullish territory, everything below 50 is bearish territory. But of course it's not that easy, because when it hovers between 40 and 60, it can be above 50, but it isn't bullish. Or it can be below 50, but it doesn't mean it's bearish. So when it moves above 50, respects RSI 50 as support, and next breaks above 60, RSI 60, then I consider it the beginning of an early uptrend. Okay, RSI breaks above 60, early uptrend. RSI remains for some time between 40 and 60, I consider it indecisive and sideways market consolidation. So when I want to go long, I wait for price to break above 60 and stay above 60. It's very nice to see here it's confirmed by chart structures, because price is making lower highs and lower lows. Then it makes the first higher high, confirmed by a higher low, and then it breaks above the higher high. Okay, for me this would be an excellent entry point right here. And that's exactly where RSI breaks above 60. So now you will also see why it's very important to look at the trade opportunity from many angles. Like now you know that the chart structures show you this is a resistance zone, and this new uptrend attempt could get exhausted once it reaches this zone. So we know we need a higher high, higher low, etc. But we also need to break above this level. Okay? And that is what we see right here. RSI is above 60, and then it breaks above this zone. It breaks and closes above this resistance zone, this chart structure, and subsequently the RSI breaks above 70, meaning very bullish. So all the ingredients came together and cooked us this fantastic trading dish. The uptrend started and made 3 nice up waves. Okay guys, this was my first video lecture. I really hope you liked it. I will wrap it up here. I'm Carl Everest. This is Trading Crypto Course. Please like and subscribe if you haven't already. I have a lot more crypto trading videos to come, so stay tuned and take care everybody.